Welcome to Moving Forward with Young Voices. Happy to have you aboard this week and happy to welcome Emily Ekshian. Actually, you also write under the name of Emily Bartui, but Emily, so good to have you on the program. For those who are meeting you for the very first time, take a little moment here and tell us about who you are and what you do.
Thank you so much. Thanks for having me. Yes, so I'm Emily and I'm based in Washington, D.C. I work in policy communications at the Crypto Council for Innovation, where I focus on regulatory advocacy and digital asset policy's role in social impact. So I also hold a master's in journalism from Columbia University, and specialized in finance and technology there, and I hold a bachelor's from UC Berkeley.
Well, there's been a lot of talk about the government shutdown, and I'm looking at an article that you wrote for nationalinterest.org that highlighted a part the of the regulatory apparatus that's been affected by that shutdown I would not have thought of, and that being cryptocurrency, specifically those in charge of crypto policy. Talk to me a little bit about how the shutdown has affected the crypto world.
Sure. So, as you may know, right now, Washington is at a standstill, and with the government shutdown, I believe it's entering its fifth week. I believe, yeah, so agencies in the like SEC and CFTC, which oversee crypto markets, have had to scale back their operations. So, that essentially means that rulemaking and enforcement guidance and even basic licensing reviews are currently frozen. And this pause really comes at a critical time when other jurisdictions in regions like Europe, Asia, the Gulf, they're moving sort of full speed ahead on digital asset regulation. They're fostering more of a welcoming regulatory environment for different crypto products, like stablecoins and other tokenization processes that we've seen on the news, in addition to welcoming crypto business operations. So that vacuum is really accelerating a digital great power competition. And we've also seen that with China and Russia. And so that risk right now is that transparency and accountability would essentially be surrendered to surveillance of finance and state control.
I have to admit, one of the things that was very attractive to me about cryptocurrency is the decentralized nature of it. And in this case, it sounds like that decentralization that comes from government being shut down actually is kind of working against us.
In a sense, so I think it's a very powerful technology. It's given ways to finance and to global connectivity in the finance world that traditional finance wasn't able to meet. But the dynamics aren't really happening in a vacuum. They're part of it's part of a larger geopolitical play and financial influence that this industry has given yield to. For example, China is advancing its central bank digital currency, the digital yuan, and it's using that into cross-border testing through the Mbridge project, which Hong Kong, I believe Thailand, and the UAE are kind of working together to foster. And that system, upon its development, could one day serve as an alternative to the SWIFT network, which we have today. And for the audience who may not know, the SWIFT network is the global payment messaging system that kind of underpins most transactions and helps enforce sanctions as well. So it's very important in that regard. And so while China is banning private crypto trading at home, it's using state-backed digital currency projects to extend its financial reach in Hong Kong and across the global south. So it's offering that infrastructure and liquidity and payment rails to kind of sidestep the dollar system. And Russia, on the other hand, it's experimenting with its digital ruble. So it's kind of not a predisposition to navigate around Western sanctions that way. So essentially, if regulatory stall, if that continues, then the broader digital asset ecosystem is kind of facing that risk.
Wow. I really had underestimated how interconnected everything was. Thank you for spelling it out so clearly. Talk to me about Digital Asset Market Structure Clarity Act that was passed back in July. I remember hearing a little bit about it back in the summer. Since then, it's been upstaged by other events, including the government shutdown. But how does the shutdown affect the implementation of that Clarity Act?
Sure. So essentially, as you mentioned, the Clarity Act, it was passed by the House in July, and it had very solid bipartisan consensus. And so it's a market structure bill that would kind of approach the digital asset ecosystem and industry as a whole, kind of regulating digital assets and its various operations and different products across the United States on the federal level. So it defines how to classify cryptocurrencies, for example, distinguishing between digital securities and digital commodities, and which sort of regulatory institutions have that regulatory jurisdiction over these different products, like the CFTC or SEC. So it's a very important bill that gives us nice classification structure. And so it's been at Senate banking since the summer, and unfortunately, due to the government shutdown, it's hasn't been able to move forward because the shutdown essentially just means that staffers can't really schedule markups or hearings, and that legislation is just at a standstill right now. So it's keeping innovators in a sort of regulatory limbo.
We're down to about 2 minutes, Emily. Let's bring this home with it looks like there are signs that the shutdown is probably going to come to a close here very, very shortly. But let's talk about why we need to keep an eye um, on the power competition when it comes to cryptocurrency and what other nations are doing as well.
Sure. So it is very important that, since the digital asset ecosystem is relatively new compared to traditional finance, it's very important to establish leadership and to set the rules of the road, not only domestically, but internationally too, regarding international standards with various institutions like the Financial Stability Board or FATF. And so the US hasn't completely stopped shaping digital finance standards. It's still active through those institutions I mentioned, and it's kind of helping implement comprehensive frameworks on the global level. But around the world, as you mentioned, we're kind of seeing foreign jurisdictions lead that race. And for example, Singapore right now has become Asia's crypto capital because it's offering tax incentives and other sort of advantages on clear licensing to that are attracting business operations. Similarly, the EU's MiCA framework, it gives all 27 EU member states a unified sort of rule book for operating crypto businesses and different crypto products. So this sort of momentum we're seeing on the global stage is kind of accelerating a regulatory arbitrage where companies and developers and liquidity pools, they're tending to move to jurisdictions where rules are more clear and innovation is more welcomed. So essentially, if the US won't catch up, we'll kind of see that momentum surrender to other jurisdictions. We kind of saw this with the semiconductor industry in the 70s or uh, in the 90s, sorry, in the 90s, the semiconductor industry just started to move abroad to the APAC region, and the US had 40% of global manufacturing domestically, but it kind of decreased down to 12%. And it took the CHIPS Act and also hundreds of billions in investment to just begin to bring back a little bit of that manufacturing here in the US. So I think the lesson's clear.
Once again, we have been visiting with Emily Ekshian. She is a Young Voices contributor based in Washington, D.C., and a graduate of the Columbia University Graduate School of Journalism. Where can people find you? Where can they follow you on social media?
Sure. So people can follow me at Emily Ekshian on LinkedIn.
Thank you so much.
Thanks. Bye.
Welcome back to Moving Forward with Young Voices. Happy to welcome Simon Laird to the program. Simon, nice to have you on. For those meeting you for the very first time, tell us just a little bit about who you are.
Thanks for having me. My name is Simon Laird. I write a Substack called Simon Laird's Newsletter. I'm also a PhD student in the economics department at George Mason University, and I work for a think tank in DC.
So, I don't follow the stock market really closely. Like, I'm not checking the stocks every day, but I did see someone talking the other day about how the stock market is hitting record highs, and they seemed pretty enthused about it. And I guess I'm asking as someone who's just kind of a casual observer of the stock market, just because it's hitting record highs, does this mean that everything's great? We should be popping corks, or are there some cautionary things we might consider as well?
I think there are some cautionary things. I don't think that uh, new highs are necessarily good. And to give an example of why, in Zimbabwe in 2008, I think most people know they had a ton of hyperinflation, and the Zimbabwe dollar reduced in value by a factor of about 100 million%. So this means that the Zimbabwe stock market, which was priced in these Zimbabwe dollars, had a great bull run. It grew, the stock market grew by about 100 million% in that year. But obviously, that's not a good thing. And the stock market was growing because stocks are real assets. And so if the currency is losing value, it's going to look like the stock market is increasing in value, even though it's really not. It could be decreasing in value.
No, that's I'm remembering when breakfast in Zimbabwe would set you back. I think it was about 8 billion, and if you wanted to be generous, you'd leave about 4 billion.
Right.
Yep. So just to put that in inflation in perspective, what is it that's driving the continuing growth in the stock market? I mean, I've watched it for, at least 30 some years and been amazed every time they say new highs, new record highs. And I'm curious though, the economy doesn't seem to be as healthy as maybe some say it is, but the
Right.
market continues to go up. What drives that optimism of people continuing to you know put money into the market?
There are a few things. So it's possible some of it could be real economic growth, but I think there are two other factors that we need to take a look at. One is inflation. So we've seen that the Federal Reserve has signaled that they might lower interest rates, which would mean an expansion of the money supply, which would mean more inflation. And since the stocks are priced in US dollars, if there's inflation, that means the price of the stock goes up, and it looks like the stock market is making record highs. Also, there's a political angle to this. So when the Federal Reserve was initially created, it was created as an independent agency because they did not want to have any political pressure on monetary policy decisions. But of course, it is certainly politically, it's adjacent to the political people. It's in DC. And in recent years, Donald Trump has been explicitly putting pressure on Federal Reserve Chair Jerome Powell, breaking the longstanding norm. So Trump is not even pretending to be independent. He's trying to force Powell to lower the interest rates, which would cause a temporary economic boost, which would probably help him in the midterms, but there would be long-term pain in terms of inflation.
Well, and it seems like we just heard some talk within the last few days about stimulus checks, the tariff
Yes,
dividend or something like that. And again,
that, in
same
my
thing.
opinion, is also a plan to make them do well in the midterms.
Yeah, it's the question is, will that short-term high of, oh, I got a check with my name on it, be worth the long-term pain that follows? In fact, let's talk about when inflation, or I'm sorry, when interest rates are artificially lowered, um, does that not expand how much credit is
It definitely
available?
does. So if when the interest rates are artificially lowered, that means that the Federal Reserve is producing new money, which it lends out. And so there's a greater supply of money to be lended, meaning that the price of borrowing money is the interest rate. So if there's a greater supply of money to be lended, that means the price of borrowing, which is the interest rate, is lowered. That's the mechanism by which the Federal Reserve lowers the interest rate. So yes, it absolutely expands the money supply. It injects more money into the economy. And then when people start spending that money, they bid up the prices of other goods, and that's what causes the inflation.
You think we would learn, but it just seems to happen
Yes.
over and over.
It's politically convenient for people to keep printing new money and using it to give a temporary boost to the economy before the elections. There's one other factor though, which I want to talk about, which is the AI boom. So
Yes.
AI is this new technology, and people are not yet sure exactly what its effects are going to look like. So there's a lot of money flowing into the AI sector right now as investors and venture capitalists want to be on the next big thing. But when there's a new technology, it's possible for it to be overhyped. And if it is overhyped and lots of people, if people put in too much money and invest in things that to a degree higher than the actual value they're going to produce, then there will be an economic bust following that when people discover the investments are not as valuable as they thought they were. Something similar happened when the internet first emerged with the dot-com bubble. So people were buying URLs. They thought there were going to be all these online businesses overnight, but it turned out that it actually took a little while for internet commerce to get started. So the people who threw a bunch of money at it right away often lost their money. There was this bubble where people invested a lot in questionable internet businesses, and then it turned out those were not productive. So the value of those businesses cratered, and their stock prices cratered, and the bubble popped, and that's what's called the dot-com boom and bust.
Okay, Simon. So I'm going to ask for your opinion on this then. Um, Obviously, with the advent of the internet, things really did change. I can't think of an aspect of life that hasn't been changed because of that, notwithstanding that dot bomb or dot com bubble that came and went. That's a great cautionary tale. Um, I hear rumbles that AI is going to be at least as disruptive, if not more so, than the advent of the internet. Your thoughts on this as you look at it? Does it have the potential to change things even more so than entry into the information age?
I think it does. I think it certainly has that potential, but I think like the internet, it will take at least a couple of decades to fully get to the point where it's being utilized. And this is similar. This is a similar pattern that we've seen with other emerging technologies. Like when electricity was invented, they didn't have electric appliances in every home after 20 years. It took a fair amount of time for the technology of electricity to develop. And with the internet, maybe it was a little faster, but again, it was a long ramp just to get online commerce started, and maybe an even longer ramp than that to move into fully remote work and other uses of the internet that we use today. So I think AI is going to be similar. We're going to use even stuff that we can do with ChatGPT is going to be incredibly transformative, but it's going to take years or maybe even decades to get to the point where we're fully utilizing that. And the plans to get rich quick tomorrow are probably not going to pan out.
Okay, so one last question. Better for government to be involved in the market, or for government to step back and let the market find its own, sweet spot?
Well, I guess there are two different questions there. In general, I would say government stay out. And as far as the economic impacts of AI, I would say government stay out. AI is a little bit different because it does have this catastrophic world-ending potential. And I don't know if that's like a 1 in 1,000 chance or 1 in 100 chance, but if it is a 1 in 100 chance of ending the world, that's really a lot higher than we would like. And so maybe there's some room for regulation there. So to answer your question, I'd say yes, there probably is room for regulation on AI safety, but the economic impacts of AI, the government should not be involved in.
Actually, I think that's a really thoughtful answer, and thank you for that. We're talking with Simon Laird. Simon, where can people find you and follow you on social media?
The best place to find me is on Substack. My newsletter is called Simon Laird's Newsletter.
Thank you so much.
Thanks for having me.
Welcome back to Moving Forward with Young Voices. Happy to welcome Satya Marar back to the program. Satya, some people are going to be hearing you for the very first time. Take a moment and tell us a little bit about yourself and what you do.
Yeah, sure. So I moved here from Sydney, Australia, some years ago. I'm a law. I have a. I'm a admitted lawyer in Australia, and I'm studying towards a master's in U.S. law here. I also have a master's in economics from George Mason University here. I research and write on law and economics, especially as it relates to innovation policy, competition, antitrust, including drug prices.
Boy, that's a hot topic too. Um, I know that right now there's a lot of talk about healthcare, in particular health insurance, and how those costs have gone up. But the cost of drugs, that's something people have to live with every month because they have regular prescriptions they have to take. Talk to me about Trump's lower drug price push. I know he's talked about bringing down prices on prescription drugs. You can understand why, as far as there's the need for it, but you say it comes at a cost. What is the cost that comes when the president is pushing for these lower prices?
Yeah, so the US pays far more for the same prescription drugs, especially patented medicines, than citizens of other countries do. And this is for a number of reasons, mainly centering around the lack of competition. So, under US law of various states, there are strict requirements on what insurance plans often have to cover, and this also leads to a lack of competition where it's hard to buy insurance plans across state lines. Couple that with other issues. So in other countries, the public insurer will negotiate drug prices and try to get the lowest price possible. This lowers the value of the drugs and can deter incentives to invest in developing and researching new medicine. In the US, so it's not a perfect idea there either. But then in the US, Medicare and Medicaid cannot legally negotiate drug prices. What they do instead is they peg the price they'll pay for each drug to what the private insurance market pays for the drug, either the lowest price or the average price the private insurance market pays. And this creates a perverse incentive to raise the prices that pharma would otherwise charge insurance companies and private patients because they get that high price for every drug that Medicare and Medicaid buy, and Medicare and Medicaid buy by far the largest volume of drugs for their patients. And drug prices make about almost 10% of the federal budget. So it is quite 10% of
Wow.
healthcare costs, I should say, uh, which is one of the biggest items within the federal budget. Now, the issue with Trump's push is that rather than kind of unwind or target these longer term issues, he wants to basically impose price controls. What that would do is he has threatened these pharma companies and said, look, if you don't lower the price that you're selling these drugs to us, that is Medicare, Medicaid, as well as a private market, if you don't lower your prices to prices that we want you to sell them at, we will threaten you with tariffs, revoking approval of your drugs, antitrust investigations, you name it. So when he says, we've negotiated with these drug companies, they're lowering the price, what he means is we put a gun to their head and they've agreed to lower the price. Now, that might be great if you get to buy at a lower price, but the issue is these companies make decisions on when and where to invest in research and development of new drugs. Incredibly expensive, billions of dollars in not just research, but to get the approvals from the FDA, bring the drug to market. And it's like shooting fish in a barrel, right? For every 10 projects you do, one commercially successful approved drug might come off it if you're lucky. So we're talking about tons and tons of money in upfront investment. And a lot of that goes on in the US. And the problem is, if you are now said, look, you can come out with a blockbuster drug, you can put those billions of dollars in and come out with an amazing drug, and guess what? We're going to control the price and artificially deflate it. What you're telling these companies is stop doing research, stop putting so much money into bringing new drugs to market. And what does that do? Well, right now, once a drug is off patent, it can be produced quite cheaply, typically. Generic manufacturers around them, they facilitate competition. But if the drug isn't discovered in the first place, there is no generic drug. So there's no telling what the long-term adverse impact of this will be.
That's a fantastic explanation, and it puts it in such a different light. Um, okay, what is the incentive for the government to have the regulatory apparatus in place that it does when it comes to getting these drugs approved? I'm asking this from the standpoint of, as a consumer, it just seems like sometimes those hurdles are arbitrary or sometimes just really redundant in terms of what's required of these drug manufacturers.
Yeah, so I think, compared to the fully private market, which would be a great situation, governments, bureaucrats, they have different incentives, right? So if a new drug is discovered and brought to market and it's sold cheaply, they may not even get credit for that, right? They're not necessarily going to get more votes or more kudos or anything like that. Conversely, if a drug gets expedited approval, and there's even a small number of cases where someone got sick or injured or there was some unexpected side effect, the bureaucrats get blamed, the politicians get blamed, and this is not a left or right thing. Even the people who are supporting Maha and RFK Jr., even they, I mean, they'll be the first to react saying, "Oh my God, Big Pharma came out with this drug, and 10 people had a horrible reaction to it. We should ban it completely." So the political incentives are really different to the market incentives, and unfortunately, it's very hard to have an objective risk versus reward calculus where you can say, "Okay, look." Let's have a streamlined, expedited approval process. It may marginally increase some risk involved, but it's worth it because we believe these drugs are going to benefit far more patients than they're going to hurt. And we believe that as long as patients are making informed decisions, they should be able to try out new drugs through an expedited approvals process. And quite frankly, I think given that we have other countries around the world that have the exact same calculus at play, if one developed country with a fairly reliable, secure drug approval process approves a drug, I don't see any reason why further, we need to do the whole thing from scratch. We can trust and have cross recognition between countries. And that, again, goes towards more competition, more incentive for companies to invest in research and development, knowing that they're not going to be caught up in, approval or approval hell.
And Satya, is this where you're talking about the possibility of an American-led multilateral treaty on drug pricing in your article?
Sure. So the point of having trade negotiations involved in getting other first world countries to pay more for their drugs than they're paying is that right now those countries are being subsidized by the US indirectly. The way this works isn't the US giving them money to buy drugs. The way this works is because they negotiate low drug prices and the US doesn't. The US just pegs the drug price to the private market, meaning Americans pay 3 or 4 times what those countries pay for the same drugs. The pharma companies know they're going to make most of their windfall profits in the US. So when they go to other countries' public insurers, and those insurers say, "Hey, we'd like you to sell at a really low price to us because we control, let's say in Australia, that's a population of 27 million people or so." Um, the pharma company is more willing to say, "Yeah, sure, we'll sell to you at a lower price. You're a very small fragment of our overall global market. We know we'll make huge gains in the US." And so those drugs exist and come to market because of American funding from American taxpayers and from private insurance patients. So there's a good case to be made that those countries should agree to pay more for drugs. And what I propose is a multilateral treaty creating a body led by the US, which compared to all these public insurers, Medicare and Medicaid have the biggest buying power, where we can negotiate with them for them to pay more for drugs. I mean, we did it with NATO. We got European countries to increase the amount of money they're paying. It's one of the good achievements, I think, of the first Trump administration. There's no reason why we can't do this. I believe it would be far more effective strategy in the long term than putting a gun to a pharma company's head and saying, sell at a low price or we will fire.
Once again, we are visiting with Satya Marar. He's a research fellow at the Mercatus Center at George Mason University and a Young Voices contributor. Where can people find you and follow you on social media?
Sure. So I'm Satya Marar, SatyaMarar on Twitter. I'm also on LinkedIn, and you can track my research at mercatus.org.
Welcome back to Moving Forward with Young Voices. We're happy to welcome Mike Viola back to the program. Mike, I know we've had you on somewhat recently, but I'm sure there are folks meeting you for the first time. Take a moment, tell us about yourself.
Yeah, absolutely. So I'm currently a contributor at Young Voices, or rather, have been through the contributor program. I was a finance fellow for the last few months, and I'm also an MBA student at Columbia Business School.
Well, I'm glad to have you on board. Look, I've heard rumors that the government shutdown is probably on the cusp of ending, but I also have to confess to you, Mike, I haven't noticed it as much. I know when it first began, there was a lot of concern about, well, this is going to throw the markets into a tailspin. I'm looking at your article from Real Clear Markets. Investors really don't care about the shutdown. How have the markets responded during this last, 41 days or so of shutdown?
Well, they haven't responded particularly much. You may have noticed if you're following the S&P 500 at all. Over the last month, it's up about 4% and change. It has not taken the hit that I think people expected. Some people thought that there would be a big slowdown in, say, other financial market metrics, like think about IPO activity, that is, initial public offering of a publicly traded stock. Yeah, that's slowed down, but the Security and Exchange Commission provided alternatives for companies that want to be publicly traded to get onto the markets. And all, you just haven't really seen a whole lot of damage. There might be particularized areas, like you may have heard rumors, and they're true, of Federal Aviation Administration cuts really slowing down some air travel this past weekend, and I'm sure airline stocks don't love that. But um, in all, there just has not been, I think, the massive damage either economically or to the way that financial markets function that people were waving their hands about. And I think it maybe hints that we don't need nearly as much of the bureaucracy that we have.
Somehow I don't think the bureaucracy wants us thinking along those lines, but hey, they want that job security. Um, so let's talk about what the market is doing. I see reports. I don't follow the stock market closely, but I see reports that say it's continuing to set new record highs. Talk to me about what's driving, the buying.
Yeah, absolutely. Well, I don't think it's that element, I don't think has so much to do with or without the shutdown, right? I think things would be more or less similar now. I'm not saying that everything is like economically sunny. I think inflation still remains an issue that everybody's concerned about. You
Yeah.
may have seen, of course, the elections last week that Democrats really swept. I'm sure a part of that is still, is because of uncertainty on not so much stock market finance, but pocketbook type finance that people are still a little worried about, and has not that ship has not really been righted. You can blame Biden, you can blame Trump, but when people are feeling a certain way, they operate that way. But I do think that people still have a lot of confidence in American domestic markets. And I think that's even true after the tariffs. I'm not a particular supporter of most of the tariffs. I understand higher level geopolitical aims that are perhaps acceptable, but I think most people understood them as being generally a net drag on the economy. But domestically, the last 10 months or so have actually seen a freeing up of the internal domestic US economy. And so I think that means a lot of the slowdowns that people expected haven't really been happening because there's still room for domestic innovation and just a freer scenario than people were at before. It also matters, of course, that there have been rate cuts and the potential for further from the Fed that, of course, have made people move a little more into the stock market where, you can, when money is cheaper, it's easier to kind of make money in the stock market than rather just bet on like government bonds that aren't paying as much.
I love this line from your article in Real Clear Markets about investors delivered a resounding verdict on non-essential government operations. They're of little importance to the real economy. Yeah, I mean, I'm sure for the person who's collecting that check, and they don't want to hear that their job is non-essential. But I think as taxpayers, it's kind of of relief to hear somebody actually use those words, non-essential government operations. Huh, little importance to the real economy. So tell me again why we need to keep them alive?
Yeah, and you're making a good point here. I think that is really what shocked a lot of people. I think other than again, some very specific stuff, air traffic controller stuff that the government is involved in that I would love to have back up and running, as well as a number of entitlement programs, the utility of which may be debated, but which I think people were depending on. I think most people have not noticed really any change in their day-to-day life. Perhaps the people of Virginia who delivered Democrats a big win do, because a lot of them work for the federal government. But more broadly, I don't think um, many Americans have really just had much reason to think about the shutdown in the first place. To your point, that again, that resounding verdict on it. You can both think of like the many different ways that the federal government gets involved in your life, but you can also think of the way that they specifically get involved in the stock market, right? There's kind of both sides of it. There's both the macroeconomic element as well as kind of that bureaucratic element that investors themselves are thinking of when they invest. I mentioned earlier initial public offerings of stocks slowed down. Um, but as the Security and Exchange Commission kind of operated on a skeleton crew of, most of its staff is furloughed right now, they started saying to companies, all right, well, all you need to do is just list an estimated price range for your shares, come up with an estimated valuation of your company, and people will trade it on the market when it goes public. That sounds awfully simple. I think that's how most people assume stocks work. Right? They're valued by the people buying and selling them. But you may be shocked to hear that a lot of this bureaucracy is there to sort of stabilize prices and trading and kind of come up with a price that ultimately isn't what people buying and selling come up with. I think when you leave the economic functions to their own, and that can be like, again, consumer finance, or it can be the stock market, things ultimately converge on what people actually think they're worth. And it's just so strange that there's a bureaucracy there that in some ways is designed to hide what things are really worth.
Mike, I love in your article how you offer, I think, one of the best little economic lessons that a person can have, namely, the parts of the financial system that operate on market incentives, where you
Mhm.
have performance and risk, they have immediate consequences. They keep going during times of government shutdown. But the parts that depend on appropriations and bureaucracy, those are the things that grind to a halt. And your point here is so beautiful. Private entities adapt because they must, but bureaucracies have to wait to be told that they can. It seems like we're being given a very prime opportunity. If we're looking for dead wood, to clear out, seems like this would reveal it.
Yeah, absolutely. And I think oftentimes when people hear of a lot of the prospect that perhaps you're hinting at, right, that a lot of government functions are not that essential or not very good at what they're doing, I think they think of the alternative as to characterize it like, oh, well, the Department of Education is going away. That means there's no more education, or the
Right.
FDA
Right.
is going away. That means there's grubs in all of your food, and all of your drugs are fentanyl. That's not really what happens in those circumstances. Again, financial markets are a great example. FINRA, which is a privately funded industry association and kind of self-regulatory body within financial institutions, when there's bad behavior among major banks, the contractual agreements they have with their members who pay to be a part of it is, you can be fined for bad behavior. Similarly, I think a lot of the other institutions like the FDA, which there are many studies indicating does not do a very good job of safety while holding up lots of safe drugs that could save people's lives. I think people hear that, they get scared of some of those, like, what's a world without an FDA like? But if,
Right. Right.
right. But if we privatized some of those functions, it doesn't mean it all needs to happen overnight. We can ease our way in, right? But there will surely similarly be industry associations that step into the role that when, people didn't, if government isn't doing it, other people will find it. Or you may remember when NPR, um, when that came up and that was defunded. Well, you may have heard, I think, a lot of NPR's audience, overwhelmingly progressive, of course, saying, "Oh yeah, well the government isn't funding NPR. Well, we will fund it ourselves. We will donate to it." And they
Good for
really
them.
they did a great fundraising job off of that. It's like, well, yeah, I think that's actually how radio stations should be run, right? Like, thank you for, I guess all sides really ended up agreeing on that issue. So again, just many functions across so many different areas that I think we really thought were, not we as in me, but a lot of people thought were a lot more essential than they turned out to be in that circumstance.
Once again, we are visiting with Mike
Yeah.
Viola. He is a Consumer Freedom Fellow at Young Voices and an MBA candidate at Columbia University. Mike, where can people find you on social media?
Sure. Well, you can find me on Substack or Twitter, ampersand, or no, not ampersand. I forget what the at site is called. At Mike Viola, all one word.
Thank you so much. Look forward to our next chat.
Yeah. Thanks a lot, Brian.